Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really glad to have with me once again Ralph Fitch, the CEO of Trimetals Mining, Inc. And Ralph is an experienced veteran with over 50 years of international exploration management with companies that are very well-known, household name companies. I don't want to spend too much time reading his impressive bio, but it is posted at the Voice America Business Channel if you're interested. Suffice it to say that he's been very successful with many different discoveries or a part of discoveries on many different places on. So he's working on still another one right now, and that's what we want to talk to him about. So thanks for joining me today, Ralph.
Thank you, and thanks for having me on the show.
Always good to have you on the show. And I should mention before we get started, the website is Trimetals Mining, trimetalsmining.com. So people can go there and learn a lot more than we'll be able to talk about today in the 12, 15 minutes we have before us now. Well, Ralph, you already, your project there is called the Gold Springs Project, and it straddles the border of Nevada and Utah. You already have done a lot of work there. You have a preliminary economic study that was carried out on that project, and it looked pretty robust. Although I know that you're working on increasing the resource and the grade, what can you tell us about, but maybe first of all, just tell our listeners, those that may not be familiar with your project, tell us a little bit about the project and about its the economic study that was carried out in the past.
Sure. Yeah, no, I'd really like to do that. So Gold Springs is the sort of focus of Trimetals Mining, and actually, our stock symbol is TMI in Toronto and TMIAF in the USA. And what we have is about a 30 square mile area that straddles the border of Nevada and Utah. And within it, there's a lot of areas of outcropping gold mineralization. And we've done about 237 holes in that area at the moment. And the resource that we recently updated, we have about 700,000 ounces of gold equivalent at about 0.7 grams per ton. Mm-hmm. That includes about 500,000 ounces in the M&I category, gold ounces. Mm-hmm. And we think the property has the potential. It's a very large property, and we've probably only drilled maybe 10% of what we think are the pretty obvious gold targets. And while we were doing this, we thought it'd be useful for investors to sort of know that what we were drilling was economic. So we did, I would call it a sort of a demonstration economic study, PEA, for a 48,000 ounce per year project. So we're hoping, of course, in the next couple of years to have a much, much larger resource and therefore would be hoping to develop a much larger mine than that. But what the PEA did show was even at a relatively small scale, 15,000 tons a day, it made 137 million pre-tax, 92 million after tax, with a rate of return of around 50% pre-tax, 35.8 after tax. So pretty solid project, and cash costs pretty respectable, about $669.
Well, and I know that as you said, you've only drilled about maybe 10% of the prospective target of this 30 square mile property. I saw a very impressive drill result come out the headline result on March 29th. It was actually in January, I believe it was, 150 meters of a gram, which is a pretty darn good hole that was drilled. Now, this was drilled somewhere, I think, 1.5 kilometers south of the present resource area, Ralph. So is this an area of focus? And maybe you can update us on what your drill results have been achieving and what you might be expecting going forward.
Yeah, so this, as I said, it's a very large property, and there's probably one sort of chunk of the property that is sort of easy to describe, and it's all on the Utah side. And it's a north-south zone, about 5.5 kilometers long in Utah, and we call it the Jumbo Trend. And most of our resources prior to the recent update were at the northern end of this trend, so sort of North Jumbo. And the drilling you're talking about, Jay, was towards the southern end in South Jumbo, near an old historic mine called the Etna. And we put 8 holes in there. We'd just obtained a quarter section of state land in that area. And so this was our sort of first drilling in this part of the world, as it were. And our best hole, we got 150 meters of 1 gram gold equivalent. And what's really important, 1 is it's long, and 2, it's good grade, and 3, it ended still in the mineralization. So we have a good chance, we think, because of the geophysics that is a very useful tool in this area to sort of show us where to drill. Geophysics suggests that it could be a lot wider, and so does the drill hole. So, you know, when we start drilling again this year, probably sometime in May with any luck, then we will sort of drill that area initially and see if we've got a really large block of ore in that area alone.
And when is this something you'll be doing imminently, like within the next several months or what?
Well, I think that we're hoping to get started in May. We've been doing all the permitting. You know, that's one of the things we do on this property because we think so much of it. Is we're sort of pushing the permitting towards so one could sort of move into mining quickly. You know, we've done things like pick up 2,600 acre feet of water, so we have the water, which is obviously an important thing in Nevada, Utah, but we have enough water for a major operation. And we do all the studies of the sort of the birds and the bees and the plants to make sure that we're ready to move forward when we sort of pull the trigger.
Your geometry, of course, is always very important in any mining operation, but when you're looking at an open pit target like you're talking about, I guess that could be very exciting. If it's wider, much wider than anticipated, that means you have the potential to pile on a lot of ounces, potentially, I guess.
No, correct. And, you know, if it's nice and sort of wide or fat and long, then you're going to be digging more ore and less waste rock around the sides. Exactly.
Very good. Well, so would you say that is one of the primary drivers then, is your exploration area in that particular area? What else might you be doing, going forward this year with exploration? Yeah.
So this year, we have to do some funding, and we're sort of looking at our sort of different options to do that, to do a really major program this year. But the idea would be to try and drill out this jumbo trend I'm talking about in Utah, and then use one drill rig to look on the Nevada side at some of the newer targets that we haven't done much work on yet, but that look very similar from a geophysical and geological point of view. But the main driver probably this year is going to be to try and drill out that jumbo trend where we think we've got a good shot at 2 to 3 million ounces just in that trend alone.
Interesting. Well, interesting. And I noticed that on March 29th, you reported that you have increased your resource by 22% or something like that, and the grades are a bit higher too. Is that the way it's looking at this stage? Can you give us an update on that? Maybe compare the grades and the amount of the amount of material resource that you have there compared to what you have now, perhaps. Well, you mentioned.
Okay. So actually, that's a really good sort of follow-on to the drilling we've been doing at Southern Jumbo, where the grade is considerably better than our overall average grade. And, as we were saying, it appears to be much thicker as well. So we think that will be a major driver for value as we drill out that block of ore. And in the recent resource update, we increased our overall average grade from 0.45 to 0.55 grams per ton of gold, and up to 0.7 grams gold equivalent. So this is extremely, why it's so important is that is now a grade that is very comparable to other deposits in Nevada. And so, we're building ounces now that are very equivalent to any other mine that's in operation in Nevada. So we think this is a big step for us.
Ralph, you mentioned you're going to have to raise some money, and I noticed today the shares are down a bit, selling at 22 cents. Always as an investor, I'm concerned about dilution. Yeah. Might you bring in, is it a possibility you have an open mind with regard to joint ventures, or how are you going to do this? Because you have 156 million shares out, and I know that doesn't necessarily matter. It's all relative. If you've got a very large multi-million, very robust, very large multi-million ounce project that's extremely robust, who cares, really? It's all relative. But it's still a concern among junior mining companies. How do you plan to try to minimize that dilution?
Yeah, no, again, a very good question. Of course, as an explorer, a junior explorer, you don't make money. You have to raise money to find the ounces. And we've been doing that at $10 an ounce, which is a very respectable number.
Sure.
And in terms of financing, we try and be clever about it. We obviously don't like dilution either. I'm a pretty major shareholder myself. Mm-hmm. And we're looking or can look at sort of the retail approach using a big investment bank, or maybe sometimes one can find a corporate entity or something that has an interest. They might give you a slightly higher price. So we're looking at all those sorts of ways to try and minimize any dilution to our existing shareholders. But you make a really good point. There's bad dilution and there's good dilution. If we dilute and through it find, let's say, 1 million ounces more of gold or something, the share price is going to go up. So the value to the investors is quite clear.
Well, the share price is certainly going to go up if you can improve on an already robust preliminary economic assessment. That you quoted the numbers, very robust numbers, and with higher grades and more ore, you would think you could probably increase it very substantially. I misspeak when I say ore, don't I, Ralph? We're not supposed to call it ore until we know it's economic, and we don't know it's economic until you're actually producing. So I
think the rules in Canada say you have to have done a pre-feasibility study, not just a PEA or preliminary economic assessment.
Right.
So before you can call it ore, but
as I say, I misspoke for people that may not be familiar with the rules of the game, and we don't want to mislead people to think you've got something you don't have. But it does look like a very good project. Ralph, we're just about out of time. Anything else you'd like to leave with our listeners?
No, I think there's going to be some powerful drivers this year. If we are successful and move forward with this major drill program, much larger than we've ever planned before, and continue to be successful, then I think you will see a significant increase in valuation of the company. So I think it's a really good stock to follow, and the gold price a little soft at the moment, may be a good time to look at it.
I think that could very well be the case. Ralph, when do you expect you might have an announcement about your drill program?
Hopefully in early May, I would hope. Certainly by the middle of May, I would hope. Yep.
All right, Ralph. And I'm really hoping to meet up with you, although you indicated before the show today you may not be able to make that. You have some important people potentially visiting the project. But if not, I hope to see you or your colleagues up at the Metals Investor Forum, and we tell our listeners to go there to hear the story there as well. Yes,
it'll either be myself or Matias Herrero, our CFO, is very familiar with the company and the project. So either one of us will be there for sure. And all right. We appreciate being asked.
Very good, Ralph. Well, thanks for being with us again, and we'll look forward to keeping up with your story. It is an exciting story, so thank you very much.